Hey everybody, welcome back. This is another edition of the Market Matrix. We're going to take a look at gold, the dollar, crude oil, and Nasdaq. And before we get going, just a reminder, this is not trading advice. This is not a recommendation to buy or sell any of these things. This is educational and informational only, and you can lose real money in these markets. So you need to be aware of that. And by listening to this video, you assume responsibility for all of your own decisions. Okay, now that that's out of the way, let's take a look. Starting with gold on the monthly. You know, if you watch my channel, you know that I'm bullish. We are putting in higher highs and higher lows on the monthly. As of right now, that has not shown any signs of stopping. So we're getting, well, we just took out 2,900 this week. Gold has a history of pulling back before it hits major levels like 3,000, and it pulled back before it hit 2,000 in the past. It pulled back before it hit 1,000, like it got close and then pulled back. Now that's just all hearsay. We're here to trade price action and market structure. So basically, as of right now, higher highs and higher lows are being made. What this means is if we get any pullbacks on the daily, I am taking ducks in a barrel longs. Okay, now looking at the weekly, we have bullish market structure marked out by these lines. We've been making just up for weeks. I think we will be getting close to some sort of exhaustion eventually and a pullback. And then the question will become, where do we put in a higher low? So let's say this week, first of all, what am I doing this week? I'm bullish until we trade down into last week's low. If we just trade down into last week's low, that will confirm a swing high in the marketplace. And then the question will become, where's the higher low form? And once a higher low is put in, that will give us the high probability market conditions, which are in alignment with the dominant upsloping 52 period moving average, with the market structure in alignment with that dominant trend. That will present us with a high probability H4 ducks in a barrel longs. Now also, it's worth noting that if we do trade down to last week's low, that will be actually a naked close sell. So this, if you've never heard this term before, this close up here is naked right now, meaning it's not covered by the previous candles at all. And if we trade down, that should be a very bullish candle. We should keep going. But if that fails and we trade down to last week's low, that's a pretty strong sell signal. So basically, for now, H4 ducks in a barrel longs are high probability until we trade down into last week's low. Heading into the daily now, I'll tidy this up a little bit. We see the green line here is the intermediate term market structure. So we're in an intermediate term upswing. Now, what we see here is we're still in an intermediate term upswing, short term market structure that is bullish. Put in a higher high here. Now, this starting next week, this could be a fake out bar. So if we basically get back up to this candle's high on Monday, I'd anticipate gold will probably keep going higher. That looks like a bit of a fake out bar. It looks bearish, and if we get back up to there, especially up to there, we're going to keep going. But basically, for now, want to see, can we put in another higher low here? And to start the week, just look for H1 ducks in a barrel longs, and that is basically it. Be bullish until the bears give us reasons to be bearish. Heading over to the US dollar on the monthly time frame, we see that. Well, as of right now, we're not confirming a monthly swing high yet, but it looks like it might be on the cards. If we trade down to January's low, that will confirm a monthly swing high, and then the bearish momentum on the monthly will be present, and basically ducks in a barrel daily shorts will become higher probability, while keeping in mind they're not the highest probability. Highest probability will be if we put in a higher low here, which will be in alignment with the short-term monthly market structure and the upsloping 52 period monthly moving average. Now over here onto the weekly. This week was interesting. We gapped up, and then we had an oops pattern, a Larry Williams classic oops pattern. So we opened up, and then we took out the last week's high. That's a strong sell signal. So now basically what I want to see is, because this is a higher low, we actually put in a higher low here this week by taking out last week's high. So what I want to see is this week, if the bears can take us down to here, what that will confirm is a lower short-term high on the weekly time frame, which will make this a intermediate term weekly high. And that'll be good for our commitment to traders currency longs against the US dollar. So as of right now, and just wait and see. I don't have a real strong plan on the weekly as of right now with the dollar, although I'm leaning towards H4 ducks in a barrel shorts just because of this strong sell signal we got last week, which is the Larry Williams oops sell signal. Especially at a time when we are looking for dollar shorts based on the committed trader strategy. So over here on the daily, it is a little messy on my chart here, so I apologize. So basically what we have is we do have some bearish market structure. The what I'm waiting for basically at the start of next week is I want to see if where the bears can put in a lower high. Do they push up here a bit? We did have a smash day, so basically we had this candle on Thursday was a very bearish candle, but what we saw on Friday is we actually traded up to the high, so that's actually a buy signal. So I'll take that off just to clean up the chart a bit. So what I want to see is I want to see if can the bears put in a lower high here, and if they do, that'll confirm this high here where this green arrow is as a lower intermediate term high, and then that'll be nice. That'll be nicely in alignment with the commitment of traders strategy looking for a dollar index short. So it's just a bit of a wait and see as of right now on the daily time frame. Wait for the bears to put in that lower high, and if they do, that'll present us with high probability H1 ducks in a barrel shorts. Heading over to the monthly, monthly has confirmed a swing, basically I'm going to get rid of this. It's a little easier to see. We've confirmed a lower high. So what that means is the daily ducks in a barrel shorts are the highest probability. Keeping in mind the short-term market structure is not in alignment with this upsloping 52 period moving average. So it's not beautiful. It's not a perfect setup, but the structure is telling us the momentum is to the downside. I think that was pretty obvious in this week's price action. Oil was down for the week. So heading over to the weekly time frame, what we see is basically I'm still waiting to see when do we get a higher low. So the weekly is a little bit of a different picture, and I talked about this last week is there's a bit of conflicting data between the monthly and the weekly. Based on the weekly though, what I want to see is can the bulls put in a higher low. We see the market structure marked out here with this line. We're now currently in a short-term weekly downswing, so the momentum is clearly still to the downside. If we can trade up to last week's high next week without trading into the low, that'll confirm a higher low, and I think at that point that presents us with high probability ducks in a barrel longs, and targets would be this high here, and beyond that up to around 90. So Donald Trump is sure hoping that doesn't happen, but it would also be a naked close sell. So this is a naked close down here. If we get our buy, if we get up there, this is a very bearish candle. If the bulls can get us all the way up there, that's a failure of this candle, and it should imply a pretty strong move up to the upside. So that's what I'm watching on the weekly. On the daily, we can see that get rid of that. Basically, what we're waiting for is, as of right now, this high up here would be the Williams true trend change to the upside. So if we can get up there, that would be a Williams true trend change. But as of right now, we're still in a downswing. So basically, just going to play the market structure on the daily as it comes next week. If we come up here and make a lower high, that will give us the highest probability H1 ducks in a barrel shorts. And then heading on over to the Nasdaq. So clean up my chart a bit here again. So basically, as of right now, we are in technically a monthly downswing. Now I've marked this level off. If we can get up to January's high, that will confirm a higher low on the monthly. So we'll see if that happens. As of right now, I don't have anything that I'm actually trading based on the monthly, just waiting to see if the bulls can confirm that. And if they do, I would look for an extension up to the all-time high and then up to 24,000 roughly. But then on the weekly time frame, I will take this off, tidy it up a bit. So what we saw this week, and this is what I talked about last week in my video, is I was waiting to see can we confirm a higher low here, which we did. Now, mind you, later in the day, Trump was talking about a bunch of tariff stuff and things like that, and it caused us to sell off, but we did just take out last week's high, which confirmed this as basically a higher low. So now what I want to see is can the bulls put in a continue this momentum next week and keep going. I'm leaning towards H4 ducks in a barrel longs. What would make me change that is obviously if we got down to last week's low. If we trade down to last week's low, that will be really bad. And I think this will start to get ugly up here and actually start selling off more. So really want to see the bulls step up, show us that H4, that strength on the weekly time frame, and give us some nice H4 ducks in a barrel longs, which will be in alignment with the market structure and the dominant underlying trend. And then onto the daily, here's what I'm looking for. So you see what we got on Friday here is we actually got a naked close sell. So this was a very strong candle on Thursday. Should imply that the market keeps going up. We took out the low though, and that's a failure of this candle to kind of do what the market thought it should do, which is continue sending prices higher. So that's a naked close sell. So I would anticipate to start the week next week. We're probably going to be selling off. So we've made a higher high. So the question to start the week is, where do we put in a higher low if we are going to put in a higher low? If we put in a higher low, that presents us with higher probability ducks in the barrel longs, which are in alignment with the upsloping upsloping moving average. The dominant underlying trend is up, and the market structure is higher lows and now higher highs. So can the bulls put in a higher low? If we do, I'd be looking for them to push it up. But if we don't, we might just get more of the same. We've been really choppy, and possibly even, a distribution top happening here. So, but all that being said, this is what I'm looking for. The key is that I have an idea at the start of the week, and I'm not married to that idea throughout the week. My ideas evolve as the market data evolves. We're here to process data. We're here to look at data and make decisions based on the changing data, and don't be married to our ideas. So hope you found this helpful. If you like this market structure analysis, you can feel free to shoot me an email at tradiustrades@gmail.com. I'll get you your own private link to our private Discord. I got a great group of people in there. I share all my insights in the market all week there, to do with market structure as well as commitment to traders. And feel free to shoot me an email. And if you like the video, make sure you like and subscribe and share it. I do appreciate those sorts of things. And have yourself a great weekend.